Coming up on the SBS On The Money podcast, the Australian share market smashed, the ASX losing $60 billion as investors go risk off, tech stocks dumped. We'll tell you why in a few moments, plus why scams are rising and what you need to keep an eye on. All of that and more next. Hi everyone, welcome to the SBS On The Money podcast for this Tuesday, the 18th of November 2025, a day where the share market was smashed. Later we'll tell you something about a different story. Scams are on the rise, what you need to look out for with the ACCC's Deputy Chair. But let's go straight to the share market today because the S&P ASX 200 had its second worst day so far this year, down 1.94% to 8,469, around $60 billion wiped off the boards of the ASX 200. All 11 sectors on the index losing ground. Information technology, the worst, down by 6%. Materials off by around 3%. There was red across the board. The banks down. CommBank off 1.7%. NAB losing 2% today. Westpac dive 3%. And even the miners lost ground. BHP shaving off around 3.7%. Rio Tinto off by about 2.7%. But if you have a look at the worst performers, technology won the worst performer, off by 17%. We'll have more details on why in a few moments. Catapult Sport, a software company, down by 11%, and Superloop, the telco, off by 11.6%. Some winners, they include James Hardie, which gained about 9.8%, and GQG Partners up by 3.4%. To tell us more about the day's market action and what happens next, I spoke with David Lane from Ord Minnett. He is the Senior Private Wealth Advisor there. David, first of all, the markets are down again today. In fact, it's now off by 6% over the past month. What's driving investor sentiment generally?
Yeah, we've seen a significant change in investor sentiment over the last week or two. Predominantly started in the US with concerns about the valuations of AI stocks, and we're heading towards NVIDIA's result later this week, and that is overhanging the markets. But really what we've seen today in Australia is what we call a risk-off trade. So really any type of risk asset has been sold off. We've seen equities, both in the defensive and cyclical part of the market, sold off. The Australian dollar was off last night. Gold, oil, and even Bitcoin have been sold off fairly significantly. So, yeah, when I look at my screens, it's a sea of red at the moment. Not a lot of positivity out there.
What's the market view then of where interest rates will go? Because there's also this theory that rates will now take a bit longer to fall in many parts of the world, including the US, and some saying in Australia that it may not fall at all anymore.
Yes, you're right, Ricardo. That's one of the issues that is overhanging markets in the US. We've had the 43-day lockdown over there, and that's meant there's been an economic data blackout. So the US economists don't have enough data. The Federal Reserve doesn't have enough data. So the futures markets, whereas a month or two ago were pricing in about a 90-95% chance of a rate cut, are now pricing in about a 40% chance of a rate cut. And that's predominantly due to the fact that the US economy is still travelling along pretty strongly. They do still have inflation there, but the Federal Reserve doesn't have enough data to go off. So we will see a jobs report coming out later in the week, which will be the first part of data that they'll have. So, yeah, expectations of a rate cut before the end of the year in the US have come off. In Australia, we've also seen a very strong employment market and reasonably sticky inflation. So we've had the Reserve Bank announce their minutes from the November meeting today. Reading through those minutes, there's a lot of concern from Reserve Bank members about, positive concern in some respect about the strength of the economy, but then also concern about the negative impact of inflation sticking around too long. So it certainly looks as if in Australia it will be unlikely that we get a rate cut before the end of the year. And depending upon a lot of the data that comes out at the end of the year and early next year, we may not even see a rate cut for quite some time in early 2026.
Speaking of interest rates, I listened into Matt Comyn, the CEO of the Commonwealth Bank, speaking at a parliamentary committee earlier today. He basically said and reiterated what his economists are predicting, and that's that we've basically seen as many rate cuts as we'll see, no more rate cuts into 2026. What did you take from his commentary today?
Yes, he is in front of the House of Representatives Economic Committee and making a lot of different statements, being grilled a lot by the politicians. But yeah, in terms of that economic outlook, CBA is in the fantastic position of probably getting as much data as any other organisation around Australia. So they look at a lot at Australian spending habits. And we've actually seen a reasonably strong consumer. So a lot of analysts have been anticipating that the consumer would be weaker this year. However, the spending patterns of Australians seem to be reasonably positive. He also spoke about the strength in the housing market and the fact that we are seeing a lot of strength there that does improve the overall thought that we've all got a lot of wealth and are able to spend money. But then he's also pushed back on a lot of the politicians, with concerns about how much social license CBA has and the fact that, CBA really is a business. And in his view, banking's still a tough industry and the margins are fairly tight. So he was interestingly talking about some of the fees that get charged and said that in hindsight he thinks that the banks removing the ATM fees was actually a wrong decision.
Yeah, and trying to justify billions of dollars worth of profits to a general audience is pretty hard to do. One thing you mentioned earlier that I want to delve into is that IT AI trade, right? The tech sector has been smashed again in the local market. There are concerns, especially in the US, where most of these AI tech-related stocks are based, that these stocks have run up too hard, too fast, that what we've seen is an AI bubble, that they're overvalued. And I guess, as you touched on, we'll know more about that when Nvidia reports later this week. How significant will that report be?
I think it will be very, very significant. And we've seen a lot of major investors reducing their holdings in Nvidia, taking some profits, which have been exceptional profits over the last couple of years. And as you said, concerns about the overall valuation of those Magnificent Seven or AI stocks, which from a market cap point of view now take up about 40% of the overall S&P 500. So it's been a concern we've had for quite some time that those stocks have run very strongly. So yeah, Nvidia will be a bit of a bellwether to the market because it has done very well as far as its profits are concerned, and it has actually had a good history of beating expectations. So it will be interesting to see, because the market at this point in time has been selling those stocks down in anticipation that they could even miss their forecast. So, we may well see it a bit of a turning point. Either, they beat expectations and we see a recovery in those stocks, or the market will continue to sell them down on the basis that they're still overvalued.
Okay, what about locally and technology stocks? Because Technology One is in the news today.
Yes, Technology One reported their results. It actually looked like a pretty good result. Their profit was up about 18%. They announced a special dividend. They said that they were on track to generate about $1 billion of annual recurring revenue by 2030. So overall, a pretty positive result. But we've seen the share price smash today, so down about 16%. Really one of those stocks that, as I said, the result was good, but probably in line with market expectations. So the market tended to be a little bit disappointed by the fact that they didn't beat expectations by a long way. And it has led most of those technology stocks to be sold off fairly significantly, and that's partly due to the global selling of a lot of those tech stocks that have had a really positive run over the last few years.
And in just wrapping up, what are you telling your clients right now, and where do you see the opportunities for investors?
Look, we are starting to see a few more opportunities come in because we have been concerned about the valuations, as you said, in the US for quite some time. And even in Australia, we've seen a lot of the large stocks trading at very high multiples. So the sell-off that we've seen today and over the last couple of weeks, does actually provide a bit of opportunity for investors. We've been a bit cautious about markets and holding cash on the sidelines. So starting to nibble at some of those opportunities and, buying stocks on, what appears to be a bit of a Black Friday sale at the moment.
That's David Lane there from Ord Minnett as the share market loses $60 billion today. From the markets, let's go to some tips about scams, because Australians have lost more than $250 million to scams in the first 9 months of this year. That's an increase of 16% on the previous period. The ACCC and National Anti-Scam Centre found online shopping scams are now the most commonly reported. Experts say it's a timely reminder for Australians to remain vigilant ahead of what's expected to be a busy Friday sales period. So for more, Angelica White spoke with the ACCC Deputy Chair, Catriona Lowe, and first asked what are some of the tactics scammers are using.
Scammers are very sophisticated criminals, and they're great at using both technology and psychology to perpetrate their crimes. One of the things we are seeing as scam losses begin to rise again is that increasingly scammers are utilising technology very effectively. So they are creating websites or emails that can look very convincing, very like a legitimate business or website.
And the National Anti-Scam Centre is warning that online shopping scams are on the rise. What do consumers need to be looking out for here?
The most reported scam type involving loss so far in 2025 is shopping scams. So we're urging Australians as we go into the Black Friday sales to remember 3 key steps to protect yourself. And they are stop, check, protect. So stop. Before you click on that link, before you pay any money, check that the entity you're dealing with is legitimate. See if you can contact them by separate, independently sourced contact deals, and read some independent reviews to see if other consumers have issued warnings about that site or that deal. And finally, protect. Trust your instincts. If something doesn't feel right, stop the contact. And if you have paid money, contact your bank as soon as possible and report the matter to ScamWatch.
It's Catriona Lowe there, the Deputy Chair of the ACCC, and she wraps up the podcast for this Tuesday. Don't forget, if you enjoy it, give it a rating or review on Apple Podcasts and Spotify. Click that subscribe button, and I'll see you tomorrow. This SBS on the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.